What's happening, everybody? Good morning, happy Monday. Just after 9 o'clock. Let's get started for the daily profit plan. All right, let's get the screen share up and running. Let's get the chat up for everybody. And another week begins. You are right. Okay, chat's up for everyone. All right, CLJ, what's happening? Jeff, good morning. Chuck, good morning. Greg, good morning. Bill and Roy, JJ, Brian, what's up? Well, things kind of cooled down a little bit overnight. Here is a look at oil, up to about 119 with the high spike. It ripped up right at the open. Uh, I think it was 30% from the close Friday. 30.96 to the highs, fading a decent amount. Again, this could still be retested, but um, I was looking at bear put spreads last night on futures, and it was more risk than reward to trade a bear put spread on oil. That was pretty frustrating. So I didn't take the trade. I was looking at 111s. I was looking all anything. Wasn't a good trade last night. So I passed. That would have been a nice little fade. And yeah, I mean, 15.28%. We'll see. This may not be done anytime soon, but took some profit on a currency pair. I was short Aussie CAD that worked out really nicely. Ended up grabbing about 225, 230 pips on a couple lots. So I'll take that. And futures market down 0.99%. I've got a pre-market move 99.12. Let's see something here. Um, stream key, fudge. All right. Well, I guess I'll do that later. All right, never mind. Hopefully energy and options holds today. We'll see. We are in XSP. We're opening up lower. We had a defense trade filled around the 670. What was that defense trade that got filled? 674, 673. We're going to be gapping lower than that. I'm curious if we get filled on our 667 and 6 trade today. Actually, no, it'd be the 668, 667 defense trade. If that gets filled and we can hold that level, let's check that really quickly. Here's the weekly. So we're down, but bouncing off of we're not quite into the lows around 6,500, 6,550 like we talked about. Um, this is XSP. So we're going to be opening up down here. Question is, are we going to be having like a zero DTE rip on the day, to the upside, at least finding some support? Or is it just continuing to fall and fade down to these lows around 652? So, the defense trade is there to help. It's, maybe a throwaway trade. Let me check my levels really quickly on my workspace because maybe we go EGO here. Take a look at levels from last week. So this is last week. There is my 667. We're doing a 668, 667. We're probably going to open below that today. Well, that's just around 1%. Futures down 107. All right, we'll see if that gets filled and holds. If we push a little bit lower, I'm curious. I don't know. This is a pretty gutsy play here. But if I want to put in a defense trade, this is totally optional. But previous lows around 655. If I do a 3-9 expiration, 655 by 654 bull put spread for 50 cents credit, and I stick with that for contracts. I mean, it's again like it's risk. I'd be throwing it here at the bottom, but if we held that level, I mean, the market would have to be down from last week's close, down about 3%. Um, I might try it. I mean, if it doesn't fill, it doesn't fill. If it does fill, it might offer a chance to offset some of the risk from last week, since we are, pushing lower and gapping lower. Typically, a big Sunday, Monday gap to the downside is rare, but that's what we're dealing with a Middle East crisis and oil prices ripping up 70%. So I think I'm going to do that. I can throw that in now. Actually, I'm going to do a 655, 654. This will be for today's expiration. So I'm going to try to defend the stack of last week's trades. If we open and bounce to the upside, we still have a chance to get filled at our 100% defense around 668 or 667, which I'll keep that trade in. Okay, we'll see what 0DT looks like today. But if we hit this level with a fill, or we fall lower and I can get filled somewhere down here and the market can bounce, then we can at least offset some of that. Right? So keep that in. That's going to be a 655. These are 5.5 levels. Hit that low. That's 5.2. We'll see. I'm going to trade XSP. It's going to, maintain a pretty small trade size like I have been. So March 9th. And come on, you mean to tell me I don't even have an option chain for that? Bro. That can't be right. I've got to have an option chain for that. Hang on, let me sign out and sign back in. That was weird. Try that again. This should be available. Okay, so logging back in. Okay, so if I have anybody that's brand new to engine options, don't worry about this trade. This is the way I'm playing some defense from last week's stack. Markets are down. If you take a look at the XSP weekly, I mean, we are down from last week's trading, and we are going to open lower as well. That's going against our trades last week, but I do basically stack trades for defense in addition to the participation trades we talk about. So I'm hoping if you join new, you can check out the core strategy video inside your classroom. But let me get the XSP trade up here. See if I can get that pending order. So XSP for the 9th. There we go. All right. So a 655. So I have the 6867. If that defense gets filled, and then I've got to go 5.5. Let's go. I mean, since we're playing defense, I might as well make it count. 6.5. Just be like a 20. I'm just going to go this way. So I'm going to go. We did that little bonus class, 2 weeks ago? If I set this trade up to kind of give me a profit trap, I could try this one. It's a lot easier to just take the bull put spread for 50 cents. If price is down here, we get filled. Price is going to be opening probably around this level anyway, around the 666, 665. So if this defense gets filled and it stays above that for the day, we've got some defense to offset. If it drops and goes lower, this one's at risk. This one's at risk. Right? We've got risk from the market sliding, all week last week, plus opening lower today. But a butterfly spread or broken wing butterfly with this trap could allow me to have an offset here. So if I go after I'm going to try like a 40-cent fill. and give me a profit trap there. So I'd be risking 240 to make up the 560. Um, if I wanted to go full, 50 cents, I don't know if this is going to fill for 50 cents. But that structure, I'd be risking 200 to make 600 if we're in that profit trap around the 655 handle. 50 is going to be tough to fill in a zero DT space. It could fill. We'd have to have price probably down to 653 or 652 for this to fill at 50 cents. But I think safer and take my chance of the butterfly trap would be 40 cents fill. So I'm going to throw this out there. I'll post this in Telegram for Engineered Options members. Again, totally optional on this trade. But that way I've got another way to kind of help offset some of the risk. So let's go Engineered Options. Engineered Options. New weekly trades coming. Adding. So 3/9 expiration. We currently have 682. And we have the 674. I have a pending 668. All right, just getting this typed in. This is pending adding a 3/9 expiration. This is a buy 656, sell 655, and buy a 653, 40 cents credit, pending good till canceled. This is a support level. Okay, trade is in. So it's a pending order. It's good for the day. If we get filled on our 100% ATR defense, that butterfly spread that I just put in is a broken wing butterfly. So if that gets filled, we have a potential. I'm trying to think. If I do the math, we've got a potential $100 times 4. So I've got a $400 profit trap. So is that right? I could be making. I did 4. Yeah, so $160. So $400 profit trap plus $160. I can make $560 if I'm somewhere around that 655 handle by the end of the day. We'll see. We'll take a look at Gamma this morning. I'll get in some new trades around opening bell. It's possible. Yeah, it depends. I mean, if price opens lower, so for this trade right here, if price opens lower than this, let's say we open around 666 or 665, if we open there, it's very possible this one gets filled for, 55 cents, maybe 60 cents. If it fills at 50, it fills at 50. All right. But I mean, it'd be nice if it's opening, first price available would be like, let's say high 50s, then yeah, we could take that trade and have more credit. Depends on what this one looks like at the open. Okay. So we'll see what happens there. Pre-market for SPX. Pre-market for SPX is 99 points. I've got 99.12 this morning. So we're already looking at a pretty high volatility zone. We've got SPX at a 50 rank. Oh my gosh, that's insane. That is insane. Part of me wants to, well, part of me wants to do like a 30 to 45 day iron condor, similar trade to what we take on daily profitly, but go out like 45 days and just try to manage this. I mean, that's wide enough that unless we are about to see a blow open move on the VIX, which right now VIX is trading. Let me get a couple more workspaces up. This is running all night. So let's go daily profit play right here. Get some gamma. We'll calculate out our move. We're going to be opening lower. There's my. So if we did crack 30. So we have 35 VIX. Wow. So 35 VIX down to about 31. So real VIX is around 31. Previous highs around 35. 35.33 divided by 16. I mean, market's anticipating like a 2.2% 2.2% move today. That's a lot, and then 3107. So we got a couple levels to mark up here. So 2.2%. And current VIX is 3113. So about 1.94. Well, we've already had a move. I mean, this morning we're down about 1%. Could we, extend that to 2% lower? Sure. Could we get back up to the VIX highs? Maybe. Could we retreat and have an upside move with the VIX going lower all day? Maybe. So again, I think we have a good opportunity to be mechanical today. See if the markets will respect the efficiency for the day. But let's get a couple lines up here. So we're going to be opening lower. Let me recenter this thing. 6740 was the close. So recenter my indicator. 6740. Peter, I'm doing so it's a 1-2-1. This is 4 contracts for me. This is 8 contracts for me. This is 4 contracts for me. So I just edited that in the engineered options post. So it's essentially like a 4 contract defense trade, like we typically do, 50%, 100%, even going down to that broken wing butterfly. I'm just going to do like a 4 contract defense. So it's a 4-8-4 structure on the trade. You can see that in Telegram. If we gap down 1%, move back up to fill that, does that equate to 2% move? No. If we gap down 1%, move up 1%, that's 1%. If we gap down 1% and we move 2%, we'd be up higher, right? We'd fill that gap and we'd add a percent on top of that. That would be a 2% move to the upside. It's possible, Sean, but remember, we're going to gap lower by like $1. Or I'm sorry, we're going to gap lower by maybe like, I don't know, $6 or $7 on XSP. So just like I said, pending order, 40 cents, and we'll see what it looks like this morning. I'm showing like 5 cents credit, but we're going to be opening up with a close around 674. We're opening up around 666 or 665. So that'll bump up in credit a little bit. We might get filled on the defense trade. We'll see how this all shakes out for the week. All right. So current VIX, this yellow box represents the VIX high and low. We could expect a pretty wild day. 99.12 points. Now, again, I'm going to calculate this roughly off the open here to be on the safe side. I don't know how the market's going to surge today. This is, I don't even, anything can happen. I'm not going to say this won't happen. The idea that Trump says something and de-escalates this and the market rips on it, that is a possibility, probably with, any other president we've seen in the last 10, 15, 20 years, we've had one single president that's capable of moving the market the way that he is. It's uncanny. However, it does seem a little stickier with what's going on right now in the Middle East. So I don't know. Anyway, I'm not going to bank on a de-escalation. I'm just going to bank on the math that we trade every morning. So I'm going to take the previous close from Friday and go up 90 points. So here would be, I'm just going to go up 100 points. So there should be about the high. Okay, so I'll change this to blue. So that's based on a market maker expected move. Now that's taking the close from Friday. Now the reality is we're opening way lower. So you could still take the open, measure that 100 points. That's still within reason. But to be extra safe, I mean, I do tend to, take this move into consideration. But to be extra safe, I'm probably selling premium up into that, measure move above that gap. Okay, and then we're going to open lower. So let's take our, just over 1% here, get an estimate of where about we're going to open. So we're probably going to be around 66.70 today in the open. And I'll go from that point, let's go 99 points. Just go even 100. And there's 65.72. Okay. So from these levels, that's the minus 100 points from the open. And then if we open around 6670 or so, that'd be around this level. You go up around 100 points. That is kind of the expected move for the day. To be on the safe side, I might have to play some defense up into this area. I'm just trying to think of how to structure today's trades. I mean, I can certainly look at a standard 10 delta daily profit play, go 5 or 10 wide, take on the risk, accept it as is. I think news-wise this week we have CPI. I think it's this week. Trump speaks at 2:35 today. Okay, fine. So if we have any trades running this morning, well, if we're upside down through the day, there might be a saving move there. If we're, in profit for the day, I would take profit before Trump speaks this afternoon at 2:35 p.m. And then tomorrow, ADP employment. Okay, so CPI is on Wednesday morning. Did this not shift? 6:30. What the heck, dude? Is this Eastern time? It should have automatically changed with daylight savings. So it is 9:30 right now. I wish I had a reference point to see where I'm at for my 725. Let's do this. Eastern time. There we go. Now let's go to Wednesday. Okay, so 8:30. That's typical. I don't know why that changed on me. So 8:30 a.m. Eastern time, news release. So Trump today, is he speaking after market then? Okay, so Trump's after market 4:35, which makes me feel better about today's trades. As far as just like, no noise, no surprise, escalation or de-escalation. That can also be after the market. So we'll see what that does. Wednesday CPI. Okay. So I think what my plan is for today is if we have the open, is going probably 5 wide and trying to get filled for minimum, $1 to make, or I'm sorry, make $1 to risk 4 and set it up with this level in mind. Let me make this a little bit thicker. So if I went this level in mind for the put side, and then the plus 100 up here, that would be trade number 1 for daily profit play. Okay. What I might also do is play some defense up here, which would be pretty cheap, and consider playing some defense down here, which would be pretty cheap. I want these, by the way, if I take these trades, I want these trades to be like maybe 25 cents, which I don't think that's going to happen. I feel like it's going to be expensive because there is a high volatility expected move. So if I pull in $1, I'm probably going to do multiple contracts here, but if I pull in a dollar, I want to be able to pay for these butterfly spreads. So, I mean, going way out of the money. I mean, maybe the round number at 6,500, maybe up here around 68.25, 60, whatever. I'll figure it out. But basically, I'm trying to win the day in the middle. So if we have expected move, we win the day, and we just give up a little bit for the defense. So we'll see what that math looks like. And then also because the VIX is pretty high, I'm going to look to see if I can sell out maybe 30 to 45 days and try to grab another similar structure like a 10 wide, get maybe $2 in change and see what like a 45-day option looks like on SPX for another daily profit play. So we've done this before. We talked about these in the master classes for daily profit play. But when I see the VIX I mean, we've had a lot of VIX in the 20s, but having a VIX up to 35, I'm like, it's hard not to want to take that trade. So we will see if vol suppression is coming back in to push this back into the 20s again. But if we come right back up to 30 plus VIX, 35 plus VIX, I mean, this high that I'm measuring is about 35.33. So the VIX breaks fresh highs. It's rare to see intraday VIX trading up for the day, but obviously anything can happen, right? So I don't know. We just have to be prepared. I wouldn't take excessive risk today. I would see if we can just kind of stick to our move. Yep, that's right. So about 100-point expected move today. Correct. So we're gapping lower. Apple getting some rolled. Good. That was a nice little roll. I've got a $600 increase in my Apple profit, and I'm looking for prices to open. So futures down about 0.8%. There's the open. So I'm going to make this adjustment here. So going down about 100 points moves me to about 60, 65.81. Okay. So let me see right now, plus or minus 100 points from the open. So 6782 is going to get a couple levels noted here. So as long as I can sell calls above 6780, 6780, and I can sell puts below 6580, let's see if we can get a decent fill. So 0 DTE, 68, nope, 6780. So 6780. Let's look at 80 by 90. So we're opening at 85. Now the plus minus already dripped down to like 63. I'm going to hang into this like 80, 85 zone. So I'm going to go look at 85 by 95. I'll play around with the numbers here. So 90 by 67, 90, 6800, and then down to 6580. 6580 is a 15 delta. Let me go down to a 10 delta, 55, 45. That's not terrible. So we're going, I don't know why I feel this is so crazy. I'm going like low deltas on the call side. I'm going higher deltas on the put side. That seems a little backwards to me, but I don't know if the market's going to give us a reflexive rally. I'm just doing the typical calculations on the plus minus on the day. So this gets me below the expected move on the put side. All right, 85 by 90. It's not really a big improvement to the credit. 60 by 50. That's decent. Let's see if we can get like a dollar. See if we can get $1.25 for this one. So I'm going 67.90, 6,800. 67.90, 6,800 on the call side. 65.60, 65.50 on the put side. I'm trying to get $1.20 for this trade. Not filling for $1. I'll try $1.15. All right, got to fill it for $1.15. This is coming in Telegram right now. So it's 67. 67.90. So 3.9 expiration, 67.90, 10 wide. And I got a 250 credit fill in SXPX. I'll see what that is in a second. And then 65.60, 65.50, $1.15 credit. Okay, so that's filled. Got a $1.20. Good, David. I'm doing I put it in Telegram, Ellen. Put it in Telegram. So it's a 484. Yep, correct. That has not filled yet, though. I just had something fill. So 250 credit. Oh, sweet. This is one of my stacked waterfall income trades we talked about. 58.50, 58.25, 5800. This one has I think like $1,300 of risk. Nope, 22.50 in risk. It's like half of 1% for some of my accounts. But 22.50 max risk, 27.50 profit trap, and that's all the way down to 5,800. So I'm gonna write that one down. You don't have to take that trade. That's certainly a lot more risk. I'm doing that on my managed accounts, but that's a 58.50, 58.25, 5,800, 57.50. So that's filled for $2.50. That's a waterfall income trade. Okay. So now, all right, blue line, blue line. I'm going to put my green line in. So I did a 67.90. So my green line is going to be my trade. So I'm up above this expected move. And then I want to go down below. I went quite a bit below this expected move by like 30 points, all the way down to 65.60. There. So expected move is the blue line and the blue line. That's based on the open. That's your plus minus 100. Now, this could increase if the VIX goes up. This could decrease if the VIX goes down. But blue line is the expected move. That's already calculated by the broker. My call side is in green and my put side is in green. So I'm slightly above and slightly below. Hopefully that's enough to get us a safe $1.15 today. And I don't mind the levels. I don't mind the legs. I'm going to look and see it if I can take the same trade for, I'll take the same trade I took here. So $1.15. Could I get the same trade filled for, let's say, I'm going to try to get like $5 on this thing. I should go for like $7. And that way, if it's threatening, maybe I get filled for like a high credit, low risk trade. So a little bit defense, I can play with the same levels. And then I'll probably sprinkle in a broken wing butterfly as well. So broken wing, or I'm going to put in some very, very cheap defense. If we break these lows, so I know that these are pretty critical lows. Let me boost the time frame here. Right. So if price is going to fall to try to find these, this is an October low. This is a November low. If price is going to fall to continue to flush into these areas, this should be looking pretty good. That's 65.50. All right. Defense got filled. XSP got filled. So our 668 by 667, this was filled. I mean, there's a lot going on this morning, right? Yeah, so trade number 51 for engineering options. 668, 667 got filled this morning. And we need price to stay above that, obviously, for defense. Okay. So 3.9. The 668, 667, 50 cents credit filled for contracts. This is the 100% ATR defense level. Okay. And I'll just need a little bit of time to get this week's trades posted for the 3/16 expiration. So pulling in $1.15. If the butterfly's cheap enough to trade it down here, I will try. See where price is at. Let's get a look at some gamma. So pretty decent gamma support around 6,600. And we're well below that for our strikes, which is encouraging. And then my real-time gamma. Same. So 6650, 6620. Those are the big levels for today. So I'll keep an eye on this one this morning. Okay, park that there. 67. The heck was that? Oh, we got a monthly trade filled. Okay, we got a monthly trade filled. 682, 681 monthly. That's already in the tracker. Let me put this one in. 682. Trade number 52. The 682, 61 monthly filled for 50 cents. It's going to be a wild March, that is for sure. All right. What else can we do for the day? So if it's cheap enough, I'll put some defense down in here. I recognize that these previous lows, like I said, around 65.50 or so. Is this defense needed for today? I don't mind sprinkling it in. Give ourselves a chance. Maybe risking. I'll risk some more money. I'll risk 4 to make 1, but have maybe $1,000 profit trap here. Let's go after SPX for the 9th. Okay, so defense wise, the call side's unlikely going to be defense necessary, but maybe I'll sprinkle in a couple in here. So if I went, that'd be a $1,500 profit trap. If this offers up any credit, then I would take the trade. So 70.55, that is 15, then go 20. That's showing a small debit right now. I don't want to pay for this if I don't have to. If I can get this for 10, 15 cents credit this morning, I'll try. I'm going to leave it for $1. You'll see the risk profile here in just a second. So if I put it in for $1 pending credit, I'm risking 4 to make 1, but I potentially have a $1,500 profit trap. So that's a little bit of defense to help on the 10 wide daily profit play. I'll put this one pending order as a defense trade. And then if I let's see, buy. Just trying to get these to overlap. So that's 25. Then go 30. Again, unlikely going to fill unless something pretty ugly happens. But there, if I can get it to fill. So that's a $2,500 profit trap, a $1,500 profit trap on the put side. I'll throw those in daily profit play here in just a moment. On the call side, I don't know if I'm going to need the defense. If we do a call fly, I mean, even 40 wide, I'm curious what this asks. So that'd be 10 by 90. I mean, you can play like a $4,000 defense trade for like 10 or 15 cents. So if we get like ripped to the upside, that's a really cheap trade. We'd have to have a pretty monster move. Let's see if this will fill for like, I'd take it for 15 cents. I'd essentially just sacrifice and make $100 on the day. So you can get this for 15 cents debit. You sneaky turd. I'm daily profit posted daily profit. Yeah, it's in there. Our standard trade's in there. Posted at 9:33 a.m. for SPX. We had a waterfall income trade just fill. This is what's going to happen. Like we're going to get some wild, crazy stuff. So engineered options is filling, waterfall income's filling, daily profit is filling. Like it's okay. I'll just have to sort this out like one trade at a time. All right, let me see if the defense can fill. So I got a pending order at 15 cents. I think I'll take it for. I mean, 20 is it's pretty much a throwaway trade, but that's up to $4,000 if we have just this crazy rip to the upside. So I will try it at 20. All right, so I've got defense in. I'm just going to post this in Telegram. So daily profit play, defense. I have a $40 butterfly spread for the top defense. So I bought the 60, 68.10. Again, you don't have to take these trades, but I'm going to just for defense. 68.10 call, 68.50 call, and 68.90 call. That cost me 20 cents debit. I have a $15 broken wing put fly. That first one is 65.70. 65.55. And then 35. 65.35. $1 credit pending. And then a 25 wide, which I don't think that's going to fill for. It's not going to fill for $1, but we'll see. Buy the 65.65. That way there's no overlap here. $65.40 and $65.10. That's 25 and 30. Yep. So I'm still risking 4 to make 1. I'll keep an eye on that one. And then $1 credit pending. All right. So I got some defense trades in. It's in Telegram. Again, the one trade is filled for 20-cent debit. So for today, if that sacrifices my $1.15, $1.15 minus 20, if I let my daily profit go all day and it's full profit, I'll still make $95 a contract. Okay. Which I'm happy to have. Right now, our daily profit play. All right, let me get this sorted. So daily profit play. So we also had a waterfall income trade fill April 30th. This is one of our stack trades. 61.90, 61.70, 61.50, 61.25 that filled for 50 cents. So we're risking 450. We're risking 450 to make 50, but we have a $2,000 profit trap at that 61.90 handle. So Waterfall Income will have some updates today. Let me take a quick peek at. So this is daily profit play for the day. And then we'll take a peek at engineered options this morning. So level just opened up right here. This is my break even for the day. I can probably just take the trade as is. This is the weekly. So if I take the trade here at the break even price, we might get filled on this or let it go. Let me get these trades in. So I'm going to do for engineered options a 670. I'll just type them on the screen. You can take the notes down, take a screenshot, and then I'll get them in Telegram. So this is going to be a 3/16 expiration. So we're going out to next Monday. 3/16 expiration. Okay. And then defense here, 662. And then down here, the 655. Okay. These are going to be my trades for engineered options. So next week, see if we can get some. It's gonna be defense. I mean, I have no interest in chasing a participation trade when the market's already down. I think the market goes down. We find that 6550, 6500 zone, or in XSP's case, it'd be 660 or 650 to 650, 655. See if we can play some defense. Okay. So XSP going out to the 16th. So the 670 by 669. There's no way that's going to, I mean, you can't get filled for a dollar spread on a dollar credit, right? As a dollar spread is showing $1.15. There's no way. Oh, that's got two trades in. Never mind. 670 by 69 for 58 cents. Let's see if we get, let's try to get like 55 cents for this. Not filling. Let's keep it at 50 then. Maybe a couple cents over if possible. 53 not filling. I'll just put it at 50 and see if it fills. So pending order at 50 cents. Fine. Next one. 62 and 61. 62 and 61. 50 cents, two contracts. Pending order. So there's my break-even price. There's my level one defense. And then I have the 655 zone. So 655, 654, 50 cents with the four contract defense. There. Three trades in for engineered options. Okay. So let me get this typed up in engineered options Telegram really quickly. New trades. Okay, now note, I don't have bullish alignments. But I'm still trading for my historical edge at 54 to 58%. Bullish wins. If you want better alignments, sit this one out and wait for price. Okay. I'm still taking these trades. So 316 expiration. $662. Okay, trades are in. Okay, Engineering Options Telegram just got posted. We have it's going to be break even level. ATR defense. Okay, trades are in. Three levels, Engineering Options. Three credit spreads, contract sizing, and allowing hopefully our grid to play defense for us. So this level, this level, this level. We'll see how the week stacks up. Oh, you're right. You're right. Sorry. Yep, those are XSP trades. Thank you. Yep, XSP. You're right. There. Thank you. Good catch. So those are XSP trades. Yep. Okay, now I'm gonna go back for some daily profit play. So my standard daily profit play here, still 10 wide. All right. I think we just had a pretty decent vol crush this morning. Prices. This is delayed, by the way. So what's real price? This one thing I don't understand why TradeView gives me a delay feed on XSP when I can get it live on my broker platform. Plus, I have a live SPX. Anyway, we're at 665 right now for XSP. I would love to see price somehow rally to 668 today. That'd get us a defense trade filled, or winner should say. So we'll see what that looks like. Let's go SPX here. Okay. VIX, decent little vol crush. I'm going to try to put in, this is a bonus trade. You're all welcome to have this if you want it. I'm going to go 45 days and do a very simple, like tasty trade 101. Let's go out 46 days. This is April 24th. And let's just look at like a 15 delta, 10 or 15 delta should be pretty good. So if I go call side, 7,100. Wow. I mean, anything can happen, but seems like a tall order. Let's go 11 delta. Oh crap. You got to go freaking 50 point or 25 points wide. Shit. I don't really want to take that trade then. So 11 delta. I mean, it's going to be a good income trade, but I'm going to have some risk on this thing. Maybe a broken wing and see what that looks like instead. If I buy, sell, buy, sell, buy. Gosh, that's a lot of risk. Sucks. Well, those strikes are pretty terrible. April 24th, just not a good expiration. If I go end of the month, that's out 52 days. Maybe the strikes are more precise. Yeah, this is way better, I think. Yeah, this is way better. All right, so April 30th. Now let's look at a 10 delta. So 7190-ish. What's this look like here? If I go 85, 95, then go 15 wide. This isn't terrible. Let me just see what a 10 wide looks like first. So 85, 95, or 10 wide here for 10 delta. Now let's go to the put side. 10 delta puts. These are so far down there. Um, that's crazy. Let's see what this one looks like. So 56.80, 56.70. I can get a dollar. If I get $2 for this trade, like risking 8 to make 2. I know it's out 52 days. It doesn't make it exciting. It's just the probability of profit with this high VIX. This should be a pretty good trade. I'm just curious on I kind of like the broken wing structure better as far as a profit trap, but all right, let me write this down. 71.95 by 72.05, and then a 56.80 and 70. Okay, so I can get about $1.80 for that trade. I'd be risking 8.20 to make $1.80. That's what we do every single day, pretty much. I mean, if it's getting a dollar to risk 4, or getting a dollar, $20.50 to make, or getting $1.50 to risk 8.50. It's like we do that stuff every single day. So it's not we're getting more premium. It's like we can still go out 400 plus points, plus or minus 426. It's like because the VIX and the Ivy rank is so high, this should be a pretty high probability trade that the expected move comes down in reality, right? Like our actual move should be way less than 426 points, one way or the other, I would think. Okay. So it would be an Iron Condor, yes. And let me see if I like this trade enough to take it. If I can get filled for $2, that's pretty good. I'd like it to be like 250 to $3. This one may not be terrible, going 15 wide. 15 wide. I mean, I've got to risk a little bit more, but the probability of profit on this trade should be pretty high. We get 300 bucks, even if I took 100, $150 out of this trade. I don't think we're gonna have to take the full risk here unless we get blown out one way or the other, but that's gonna be pretty hard to see. So am I comfortable with that risk? I mean, it doesn't really allow me to play much defense. Let me try something else. So I'll keep those. I'll keep this in mind. There's no hurry on this trade here, but I could get roughly $3 and change. I'd be risking 1,700 bucks to make 300, which percentage wise, 17. I mean that's pretty much a mechanical daily profit play. 15 to 20% return. That's right in line with what we expect. Okay. So do I like the trade? Kind of. If I could get, I mean, I'd rather get like a dollar to $2 of broke wing butterflies and also give myself a profit trap opportunity. So if I went, a 10 wide butterfly here, um, or even a 5 wide, like that's not bad. Risking 450 to make it's just better return on risk. I mean, this is 11%. If I go 50 cents, risking 450, I'm making 11%. The 15 wide iron condor was better. If I went 10 wide by 20 wide, now we get a dollar, but I'm risking 9. So I get a dollar, I'm risking 9, I get 11%. Now this one has $1,000 profit trap. $1,000 profit trap. It's okay. Like that'd be the trade-off is if I'm getting the dollar up front, I take the trade, minimum a dollar fill. Let me see if I can get this one. I don't mind this trade. I'm going to take this trade for hopefully a dollar fill. Dollar credit. Don't be stingy, market. I'll let that marinate for a dollar. And then the other one is 56.80. 56.80. That's so far down here. I'm going to go 57. Got filled for a buck on that trade. So this is a bonus trade. I'll give this to everybody if you want it. 57 by 56.80. So that's 20 wide, 30 wide. So 10. Let's try this. So this is 10 wide by 20 wide. Yuck. I get way less credit on the put side. Interesting. Um, huh. Way less credit on that trade. Let's go up a little bit higher. 50, 40, 25. Buy, sell, buy. So 10 and 15. Now that trade's pretty darn good. If this would, I mean, if this is showing like 60 cents credit, I want a dollar for this though. Let me see something. Can I get $1.50 to $2 credit? I'm going to try $2 credit. See if this will take. Not filling. Let's go by. Let's go 20 cents different. The bid ask is pretty wild here, so this one might be challenging to fill. This one I want a dollar. $1.25. Still not filling. I guess I'll try for a buck and just make it the same. Okay, so I'm risking 9 to make a dollar, but I have $1,000 profit trap here. I'm going to let this one sit for a dollar. Okay. So this one filled. It's an April 30th trade. I'll put this in Zoom. Bonus trade. April 30th. Buy the 7195. Sell the 7205. And buy the 7225. Dollar credit. So that one is $9 max risk, $1 credit, plus a $10 potential trap. That trades in for everybody. And then the working order, similar structure, risking 9 to make 1 with $1,000 profit trap on the downside. SPX, 430 expiration, 57.50. By 40 and 20. Okay. So both of those are the same structure, $9 max risk, dollar credit, and looking for $1,000 profit trap. Volatility index is going, it's staying right here around 31 and change. Chart alarm set at the recent highs at 35. And we will see what happens for the remainder of the day. Uh, ETF for Vol Crush. So if you like Vol Crush, SVXY is a pretty good one. This one tends to do pretty well. If you want to be short the VIX, this is pretty good here. It's cheap. I mean, I know a lot of traders that love some SVXY. You can, buy 100 shares, and if the VIX crushes, this will, work its way higher. So I'm just, I like to load into SVXY when I think we have like I don't know, it's rare, but obviously I'm, pretty patient looking for those one-off events like the VIX rips to 40, 45, or 50. I tend to buy a lot of shares of SVXY. This is a pretty good one to trade. If you think that the 35 is going to be a vol crush, that's a maybe. Right now it's like I think we have this like roller coaster ride of volatility. I don't think the high is in. I think we could have another, 45, 50, 60 VIX before this market's going to actually put in a bottom. So I'm going to hold off on buying SVXY until we have maybe a big ridiculous spike. We are synthetically long on VIX right now, and that's showing some profit. So VIX profit is, we're up about $350 right now with those synthetics. It was up like 450 last night. I got a couple of bear put spreads that I want to look at seeing some profit on. So this bearish breakout's up 65. This one's up one. Well, gosh, the bid ask is so shitty. I mean, I'm up. This expires on Friday, and I'm up 100 some points. Like this has to be close. I have pending orders on this thing to get filled. 395, 395. It's like I'm trying to get filled in this thing. I mean, if I can take like $150 out each one or $150 out of each one, that's not bad. Let me see if I can get $100 of this one. So it'd be a 290 credit. Let me cancel these really quickly. So 395, 390. So this little break out here. Can I get $100 out of this one? So that's $1.90. Let's go 290. 390. Let's see if we can get it. Or what? $3. Not filling. Give me $100. 290. So annoying. So I'll leave that one in for $100. This one, 95. Let's try to get this one's a better positioning. I mean, $4 would be great. Not getting it. 390. That's $200. Not getting it. 380. All right, I'm just going to go 390. So that makes $200. Cool. This one, I'm asking for 100. This one's a little bit worse positioning wise. This one's better. Hmm. I mean, if they're not feeling, I might as well put them back up to where I want them. So I'll put them at 390 each and take $200. They look better with time this week. They expire on Friday. All right, let's check on these double up trades. Double up's up 140, while the other one is at a risk of 100. So, I mean, I've got profit between the two. We're trading at 66. Do we get to 65.50? This one could look even better. Let me look at the analysis here. Okay, so here is real price. This is my profit trap. This is profit trap by Friday for that 50 wide. You know, if we should see some profit on this thing. I mean, we're seeing profit now. Yeah, I've got about $200 profit right now. It gets even better if we get price into like this 60, 65, 60, 65, 50 zone. I think our profit jumps into like the maybe 500 plus dollars. I'm gonna let this one ride a little bit. So right now the difference is I've got maybe showing 150 to $160 profit, but then I'm losing 100 on the other trade. So the trade-off is like I'm not really stoked making 50 bucks on those two trades. I think the reality is let's get ourselves maybe a $500 winner, maybe a $1,000 winner. This will look a little bit better as we go into the later part of the week. So if we do end up going to 6,600, 6,550, it happens tomorrow or Wednesday. This one could look very, very good for us profit wise. Okay. What do you feel is going to increase the ETF? What's that question, Rob? Are you looking at the SVXY? Are you asking like what I think is an increase? I mean, I just think technically we have a lot of support. That's what you're asking. I mean, we have let's go to the daily chart here. We're at the 200-day moving average right now. Okay. So we have some intraday buying. That's pretty noticeable. However, I mean, this market's only pulled back about 6%, right? So from this high to low, markets pulled back 6.18%. That is the same percentage that we saw last year, right there. Okay. I don't think that this is the time to get super brave. If we end up breaking, this is where the market's going to be really frail. If we break below this 6,500 zone, this market probably has a chance to get down to 6,200, possibly around number 6,000, maybe even scare the daylights out of everybody, get into like the mid fives. I mean, that's where you're going to be looking for like, where's the taco trade? Where's the Trump put? Where's the Fed put? Where's Powell going to step in? Where's Warsh going to? I mean, this is where like, okay, we talking like put levels where the market's going to backstop it. We're gonna kind of jawbone our way through this, but structurally being down 6% does not make me think buy this. Short term, sure, maybe a short term buy the dip, but very defined risk. As far as me positioning, I'm going to go lower. So speaking of positioning, we still have a VIX at 30 plus. I'm going to sell some premium. Project Options Edge, I can probably go out to like 40. I mean, this might be a defined risk trade. I might do this on SPX. Let's see what the spreads are. Lows around 4,800. I'm going to go to September here for SPX and see what the spreads look like. This would be for Project Options Edge. So if I went out to September 30th or September 18th AM, whatever expirations look more precise. So our lows around 4. This is what I was afraid of. Is see how wide the strikes are? If I do a 50 wide, so I mean it's 280 bucks. There's no repair here though. So if I take the trade, there's no repair. This is why oftentimes if I'm doing Project Options Edge, I like to trade the indexes like the ETFs because I can at least repair the trade and own some shares. This one is all or nothing. I'm risking 47.20 to make 280. I don't really get excited about that. There's no plan B. If I do a broken wing, this might be interesting. So if I buy the 48, sell the 47, and then spread this by, let's see. So I could buy the 48, sell the 40. So that's 50 wide. This is a butterfly. And this one's not terrible. That's still a hefty risk though. I could probably structure this better with a an ETF trade. It's going to take up way less buying power. Probably the profit's extremely high. It's a $250 income trade. I'm going to take this trade and try to get like 275 credit. I don't think I mean, this is a pretty good probability profit with this VIX. So let's try two. If I can get 250 or better, I'm pretty happy with this trade. So 275 not filling. Let's try 265. 265 not filling. 260. Come on, let's be generous here, broker. Let's give me a 250 fill or better. 255 not filling. 250. 245. All right, 240 fill. All right, Project Options Edge, you're getting a butterfly. It's a broke wing butterfly. I'm going to set this trade up. Everyone's getting this for Project Options Edge. All right, 240 is getting filled. Okay, still working through this one. 2287. Okay. Project Options Edge, new trade. This one's got some defined risk to it. Probability of profit's 96%. There's no assignment risk here, but there's not a plan B to repair this one either. We have a $5,000 plus profit trap. Here's what the look of it is. So my max risk is 4760. That's about 2% for some of my accounts, about 1% for some of my accounts. Probability of profit's 96%. I'm getting a little income trade at 240, but I have a profit trap worth $5,000. So if that holds around 4,800 to 4,750, we'd be below the April 2025 lows by September. Hopefully that's not the case, obviously. What's the opposite of SVXY? So what are you trying to do, Rob? You want the VIX increasing? I mean, then why don't you just trade the VIX? Trade the VIX, trade the VXX, trade UVXY. You can trade those if you want to go long, long volatility. I've been long the VIX. You want to go short? I mean, you can do both. You can trade VIX. You can trade VIX. I can trade VIX. I can go short VIX. I can go long VIX. But like I said, the easier position if you want to go, if you're looking at a short VIX, SVXY is a pretty easy trade. I just don't think that the market is done. I think that we might have to have like a volatility event. And if that shoots up where the VIX is at, 40, 50, or 60, then yes, I will fade the VIX. I'll probably buy SVXY. But if we have a vol crush and we're back to, low 20s again, I think we're in this like 20 to 30 range where the VIX is just going to stay relatively high. So, I mean, it's higher VIX. I just don't know if we're going to get like the big fat, VIX went to 60. What a great payout for being long the VIX. If anything, it just makes VIX expensive. And obviously, I mean, you know how that works with options. If you pay for something expensive and you don't get that big fat move, um, it's a tough trade. All right, let me get this one in for Project Options Edge. Okay, so this is a new trade. We're now in trade number 121. Did I do a 9:30 expiration? 4,700. So this is a broken wing. So 240 profit per contract if SPX is greater than 48.50. Uh, and we have a $50 profit trap from the 4,800 to 4,700 area, or 4,850 to 4,750 area. Okay, trades in. The VIX is at 20 and you wanted to bet for it to go to 40. I mean, if you think that's the trade, then you can go VIXy, go long the VIXy, right? The numbers don't work quite the same, but if you think the VIX is going to go from 20 to 40, buy the VIXy. You can go VIXy UVXY as well. No, that's actually, yeah, this is right. So if you go long the UVXY or long the VIXy, VIXY, that is long volatility. This is VIX short-term futures. This is the daily chart. This should be about right. Let me double check this. Yeah, I mean VIX is getting a bit of a crush today, but I just think we're in this like 20 to 30, 20 to 30, 20 to 30. While this dispersion is happening, while the market has all this chaos under the surface, 20 to 30 seems like pretty reasonable. If you think it's going from 20 to 40, then yeah, you can go VIXY long. Not sure the heck my share prices went. You go long VIXY, but these aren't meant to be held very long. Like the timing of this trade is you got to be right within about 2 to 4 weeks. Otherwise, this thing has that natural reverting where it just goes lower. So I don't know. It's just a tough trade. It's tough to like permanently hold long VIX, right? It's hard. These instruments get recalibrated like every 30 days, and they'll I don't know. It's if you time it right, you get paid very well. It's an asymmetric trade every time if you get a big vol move. But they are tough to hold. I wouldn't hold these more than like 30 days at a time. So it'd be VIXY. I'll put this in the chat. VIXY or UVXY. Those are long VIX ETFs. But those are not meant to be held for, 2, 3, 4 months. They're looking to be held like if you're going to time it, you got about a 30-day window to get it right. So I wouldn't, toss a bunch of money at it and chew up a bunch of unnecessary trades because they might be losers. But, one good payout could be great. If the VIX rips to 40, 50, or 60, it pays pretty well. Anything else? Just checking some updates here. Okay. So for the day, I mean, here's our current market. I mean, things are pretty quiet on the old Western front for the day. We're not done yet, right? Obviously, the market's just beginning. We're in for this thing for an hour. Um, let's take a look at today's daily profit play. All right, I got to get some of these organized. Let's go April 30th filled. That was the broken wing, so 7195. 7195, 7205, 7225. This is a broken wing bonus. April 30th, this should be this is the waterfall stack trade we did. So 7190 or 6190, 6170, 6150, 6125. Is that right? So 20 and 25. Yep, that's right. So this is a waterfall income strategy 2. 68. So I did 6790 today, 6800 today. And then the put side, this is my daily profit play. And this is my DPP defense. Okay. That's another reason I like Tasty Trade, is I can just keep my trades pretty organized. So daily profit play for today is up of the max 115. It's already up $60. Defense trade would be a throwaway of 20 cents. Double up. We're looking for the downside. So that 6550, 6500 zone, if that happens to be hitting this week with a path of least resistance, this thing pushing lower. This potentially has up to almost $4,900 of profit for $125 risk. Now, the probability of making $4,900 by Friday is going to be pretty rare, but if we can get this thing to pay us $500 to $1,000, I'd still be happy to take that trade by, tomorrow or Wednesday, if possible. Then a couple breakout trades. I just sprinkled these in. I'm looking for, anywhere between $100 to $200 per trade. And then we have some waterfall income trades stacked up. Okay. So for today's engineered options, unless we have price getting back up to, we had a defense trade filled today. So the 668, 667, we need price to rip up about 3 points today, 2.5 points to get this one back into profit. So this would be EGO weekly. So I have a weekly trade, weekly trade, weekly trade. This is a defense trade. So let me rename this one. So 668, 667. This is defense. Okay. And then this one is a monthly. Dang it. All right. So weekly and then defense and defense. We'll see how they stack up today. We need to see price get back to 668 for this defense to win. And it'd be close. We could actually make profit. So if we have a 1, 2, 4, we'd still make $50 net profit on the week, despite the market being down, literally 3, 4%. But we need price to get back above 668 today if possible. Okay, otherwise we have new trades in. DPP at 15 cents, whatever you want, PO. If you want to, that's you. If the numbers look pretty good, I'm willing to hang on this one a little bit longer. But yeah, a 15-cent debit is great. 10-cent debit's great. 5 cents is going to be, you're pretty much going to wait till the end of the day anyway. But our levels look pretty solid. So we'll watch. But yeah, that's if that's all you did today is take the $1.15, you exit for 15 cents. That's a great win. Take your $100 a contract, and we just keep winning. Okay, get some feedback on my engineered options. Give me a second here. Um, Engineered options 650, 655. It's like that is a pending order. I'll edit this one. So, quick update. I'm getting notes from customer support on the broken wing butterfly defense. Do not take the trade for a debit. Place the trade as a pending credit, good till canceled. Credit spread is greater than the debit spread width. Therefore, I am asking the broker to fill at a credit. Okay, updated. All right, any other questions for today? All right, so it's been a busy morning. Everything's looking fine for daily profit play. We need price to stay below the green, above the green. So far, so good. Pretty much right smack dab in the middle. Plus 100, minus 100, and you can see that price has gone pretty much nowhere. Now, that doesn't mean it's going to stay like this for the rest of the day. The market might spend time going up through the morning and trying to fill this gap. We'll see what happens. Watch the VIX. It's now sub 30. So we had a 35 VIX, now down to 29 and change. So keep an eye on that. If this is an aggressive zero DT buy the dip, okay, it's just the day. Would be nice would be let's do some takeaways for today. Notepad. Daily profit plan. This week's game plan. So VIX greater than 30. Peak around 35. Currently fading to less than 30. So we sold some premium. Waterfall income. We had 2 trades filled. We had a monthly stack filled. And then I had the monthly stack filled with the higher risk but larger profit trap. So I'll talk about those. Let's see what else. Engineered options, 668 key level on XSP today for net profit on the 3-9 trades, 3-9 expiration trades. Daily profit play. So we were 9 for 9 last week. Tay looking good as well. Just do the math and trade the plan. Bonus trades. Looking at the broken wing call fly, about we did with like a 51 DTE and a broken wing put fly. So this is pending. And this one filled. So it's risk 9, $1 income with a $1,000 profit trap. Same thing here, risk 9, $1 income, $1,000 profit trap. The spread's looking at like 45 to 50 days out on an iron condor. It's the same thing we do every single day. So it's like, I still like the trade, but I'd rather just take it in a 0 DT. Yeah, if you did the 45 to 50 day iron condor, you still want to manage that thing tasty trade style, which is go out 45 to 50 days, plan on managing at the halfway point for better for worse. If you hit a mechanical like 25 to 30% take profit or 50% take profit, or just manage it on time, you're just kind of optimizing that that time decay window. Let's see here. Is not better to wait for the market open before placing an injured option trade. What's the question? Is it not better to wait? We are waiting. The trades that took last week are getting filled. The trades we have this week are pending orders. It's going to hang out. Okay, look, the market's not done. If the market goes up this week, we're getting a bounce right off the 0 DTE, but like, look at this space. Okay, I'm just speaking from a technical side. This measured move should be hitting this green line. So even though we tested today, we're going up, I don't think this market is done pushing lower. So engineered options, I say we just let the trades ride for the week like we have been. Like, look, this whole market, by the way, since the top here and the top here, we've been making money every single week. And tell me how that's been, easy to do. It hasn't been. This market has been absolute crap and leaning to the downside, and we're still making money. So, to me, this is first real breakout we've seen in 14 weeks. There's a little bit of follow through. I think it happens to line up to this, measure move. So I think today is maybe a short-term 0 DT flow, and the market just fades it and continues to push lower towards this, 6550 to 6500 zone. Just saying. So engineered options, I let them sit. Okay, let me see if we can get the. I'll keep an eye on the SPX, because if SPX gets to 6680, then that's a chance that the XSP could be at 668, which right now we're trading at 667, 62. So we might, heck, we might sneak in if we get a gap fill today. If we get a gap fill today up here, that'd be a 673. I mean that's hard to get, but maybe a 670. I don't know. I think we could get a gap fill, maybe play some defense and still win. Still win engineered options this week, which would be kind of crazy. So if it's weekly, and this one gets me, $200 profit, I still make money. But I need price to rally another, 30 to 50 cents and stay there. So I need price to get above 668, stay there, and we can still net profit, which is wild to think, but that's what engineered options is about. We play defense, and this market has sucked for weeks, but we might be okay. Which is why I like the 7 DTE and not the 4. If I just trade for the week, it's like, there's zero DT flows for a reason. So anyway, we'll see what happens. Okay. So because I've got a delayed feed here, I'm just going to watch it in my